Okay, we start today's market talk. Uh, your portfolio is like a bar of soap. The more you handle it, turning it over and over, the smaller it becomes. This is the basic issue I have seen. We get very addicted to checking our demat accounts when we are invested. And one of the secrets of investing success is to be lazy with your trading activities and diligent with your studying of businesses, diligent with your research. So, better to avoid constantly monitoring your portfolio so as to be spared from emotional roller coaster triggered by market fluctuations. As it is, when the prices drop sharply, you get the news. So many people will ask you what is happening and all that, or the channels will tell you, or it will come in social media or something like that. So, like, I check my portfolio once a week to see if there is some mispricing or some opportunity or something like that. Otherwise, don't waste your energy and getting embroiled in checking your portfolio. Devote more time to studying businesses. Okay, so we'll come to the questions. Uh, 10 questions for discussion. First question was, are we in a bubble? My view here is India's macros have improved a lot. Growth is good. Fiscal deficit is under control. Inflation is uh, around 3-4% and going down. There is a overall manufacturing growth. Currency is stable. So macros are very good, and the earning growth is projected to be in high teens, at least 15% for the next 1 or 2 years. So if you see the FY24 Nifty EPS, that is projected to be around 990, and FY25 at around 1130 to 1140. So taking that and 20 PE, the intrinsic valuation should be around 22,600 to 22,800 at 20 PE. So that means we are fairly valued, and not that is the Nifty as such. Now, the problem is in companies where there is too much of future growth which is projected while present growth is not there. So the problem which will come is, in case there is a weakness or there is a lack of demand and the revenues fall, and these people have lot of debt and they have lot of interest payment issue. So if the interest coverage ratio of them, that is the EBITDA of theirs, falls below their interest requirement, and they have a capex requirement, so they will have a negative cash flow. And then once the stocks start selling off, then there will be no liquidity. Now, the other good point about India is that we are having a good middle class, which is providing immense potential for wealth creation in the next decade. And this growing middle class is creating demand for consumer discretionary goods, and that is being reflected in their valuations. So if you see all the companies where there is a consumption monopoly, they are trading at very high P's. Some of them are trading at around 100 P also. I'll give examples. One of them is Varun Beverages. Second one, you can take it as Titan. Third, maybe Trent. So wherever there is big consumption related monopoly, the companies always trade at very high valuations. So for the year or so, next year or so, five key themes would be: one is urbanization, then government capex, digitalization, which is helping the financial system, experimental consumption, which is eclipsing the traditional consumption. Now, I again give an example. Experimental consumption is, you can see in terms of Trent or Sula wines or cars, etc., or SUVs. So this is, you may not find that the toothpaste demands are going up, but demand for these kind of discretionary items is going up. And the last theme should be energy transition to green energy. So is this a mega bull run for India? Now, there are two things which are working nicely. One is capital, and second is talent, which is providing growth to niche businesses. Uh, so, who is putting money? All the P's, uh, venture capitalists, they are investing. In addition, there is mutual fund money, PMS money, insurance money, which is moving into the equity markets, which are providing a kind of base. So we are no longer dependent on FIs inflows, oblique outflows for valuation. So despite FIs outflows, it is a mutual fund money which has provided the base. And last month, SIPs have now reached around 19,000 crore. Will manufacturing power the economy? A contribution of manufacturing to GDP will grow as supply chains across the world reorient. So people are talking about Europe plus one, China plus one, etc. So the manufacturing is growing, and as compared to services, because earlier we were a services related economy, but now the contribution of manufacturing to GDP will slowly grow, and it is being seen across the board. So things like electric mobility, battery storage, semiconductors, mobile manufacturing are the next set of industries, manufacturing industries, which will power the economy. Next is, will IT companies reinvent themselves? There are worries over AI taking over IT services job. Will these companies use AI to make businesses more efficient and generate more revenue, or they will become obsolete? So over the years, they have transformed from application writing to cloud computing to consulting and now AI. I think IT companies will reinvent themselves and come up with cheaper, efficient, and faster solutions. So, should you sober your expectations for 2024? One thing is definite, that the leaders of last bull run won't be leaders of the next bull run. So, have patience, pick stocks with margin of safety, which provides you relatively better runway for making money. If earning growth momentum is there, you can't. The other point is that sometimes we feel that the valuations are too high, but if earning growth momentum is there, you can't wait too much for valuations to come down also, because the stock keeps going up. Hence, we have to work hard to find opportunities in this market also. Now, large caps versus mid caps and small cap, which segment will provide better returns? For higher returns, you have to diversify into mid and small caps because they grow also faster. But they have become expensive, and you can see from latest information which is coming out from SEBI and RBI, etc., that they are now after them to cool down the market. They have told the mutual funds to also do risk assessment and all that. So we may see some underperformance over the next year or so, but if you can remain invested, then they will outperform the large caps over next 2 to 3 years. Please switch off your volumes. Business prospects of PSUs. There is a significant change in perception of PSUs. Some are now becoming moated businesses with increase in profit pools. Examples are the defense companies. There is no competition for them. Companies like BL, HAL, Bharat Dynamics, etc. There is no competition. So they are moated businesses also. Nobody can touch them, and they will keep getting orders. So don't overlook them, or don't have biases that they are inefficient, as there is a change in their business narratives. Now, just for an example, SBI is making around 60 to 70,000 crore of profits in a calendar year now. So that is the change in functioning which has happened. Obviously, there would be some people who will not perform, or some there would be some issues. Always will be there, but overall there is a significant change. So don't ignore them. Should you diversify your portfolio? Uh, Diversification across asset classes and within asset classes is required. So you should be invested across in equities, you should be, or mutual fund, you should be with flexi cap, special situation, quant, large, mid, and small caps, all across wherever there is growth. And focus on long-term goals and not too much on market timings. But diversification across things like debt, gold, government securities is essential, because they will also perform very well. What is the most important lesson market has taught us? Uh, in my view, it is recency bias, putting too much of weight to recent events and forgetting the basics and the basic trend and the basics of business issues while taking investment decision is the most important thing. So recent events is no guarantee of future performance. So last question is the research important? I think it is important, but we have seen quant funds which have outperformed because quant is unbiased. Quants perform better because they can see the change in trend. So they don't have any biases towards PSUs or towards power stocks or defense stocks or anything like that. They see the change in price and volumes. They will go and shift into those kind of stocks, and they have performed very well. But understanding businesses and management quality is also important part of research, which quant funds do not have, or they miss out on that. Hence, solely moving on price action or is not adequate. So you must understand the business only, because finally technicals is also driven by the business only. Now, coming to a few technical issues, US 10-year yield. Now, if you see what is happening in the US is uh, the yields are declining. And if you see now, they are coming to somewhere closer to a level of 4.07 now. And they are likely to decline further. And the trend is clearly downwards. They are below all the 2050 MA. This is because Jerome Powell, in his testimony before Congress, said that Fed was not far from cutting interest rates. This is the first time he has said it. So S&P 500 made a new high, and we are seeing probability of 3 to 4 rate cuts by Fed in 2024. And market is also counting on smooth landing. Hence, so you saw the yields fell. The Brent crude is also generally in the same level, stable level, not going anywhere, not going below 70 and not crossing the declining trend line. Dollar index had a big fall last week. It has now come to around 102, and it will shortly test this 100 odd level where it had rebounded from last time. So watch out for that. This is good for all the emerging markets and commodities. So that's why you are seeing a rally in metals. Gold had a spike, and it consolidated in this range, and suddenly it had a spike. And gold, this spike is also related to a lot of buying in China, because their stock markets are not performing, and hence the Chinese are buying more and more gold, because as a hedge against inflation and other drop in the asset performances. So as I said, Nasdaq also performed. It corrected in the last few days because the big stocks like Nvidia and Apple, etc., they corrected on Friday as such. And Nvidia, I think, from the top came down around 10%. But because basically it must be related to profit booking. But if you see, it's a trend is up, and till the time it is above this trend line, it will remain strong. Now, coming to India's bond yields, if you see here, the bond yields are correcting. It's on a declining trend line, and it is bound to test the 200 DMA of 6.994 very shortly. It will test there. And this is happening because Indian bond markets may see strong flows from June 24 onwards, as our sovereign bonds get included in the JP Morgan Emerging Market Government Bond Index, and bond yields are expected to go lower than 7% in FY25. First 2 months of 2024 saw a flow of $4.49 billion in Indian bonds, 5 times from the last year. And inclusion in Bloomberg Global Aggregate Index is also just a matter of time. So in total, expect to get around USD 100 billion of inflow over next 3 to 5 years in Indian bonds, which will reduce the demand, and hence the bond prices will also go down. Now, coming to India VIX, again, very interesting. So, if you see here, India VIX declined, suggesting return of confidence among the bulls. VIX fell around 10% this week, reflecting that the put sellers were now getting aggressive. Earlier, the call sellers were getting aggressive. But the point to note here is traditionally, once the elections are announced, so which is likely around 15th of March, the VIX starts going up, and with that the premiums will also start going up. Hence, uh, the for long term selling options may not be very prudent. It will be more prudent to buy long term options at present, as the premiums will keep going up as the VIX will go up. Now coming to Nifty, so if you see here, the fear was that the markets would crack sharply. Uh, but if you see here, the this is a Nifty 50 1 week chart. We are constantly making higher highs and higher lows. The trend is up, and there is not a single metric which is weak. So commodity prices, crude prices, forex reserves, currency, etc., are under control. The point is that most positives are in the price, and as what the World Bank or IMF is saying, that the world growth is going to be good, so exports will flip again, and will any upturn in exports will provide additional support for certain sectors which are underperforming right now, like autos and chemicals. So that should be a positive point. Otherwise, most of the good things are in the price. Now let's see the daily chart. Now, if you see here, if you this was the Fibonacci extension which I had done. Now, if you see here, the first target of around 22,520 odd was generally met on the last trading day, and then market retraced from there. So it is likely to, in the short term, go and test the 61.8% extension zone of 22,570. And if you see here, it has taken support at 20 EMA over the last few days, number of times, here, again here, and it bounced from there. So the trend is positive. Now on, if you see on 4th March, Nifty made a fresh high, then it suffered a pullback, went down, then it went back again up on 6th, made a fresh all-time high. So I think in the next few weeks we will see some follow-through action. This is the hourly chart. So in if you see the hourly chart, the Nifty has taken support at the 50-hour moving averages here, which is at 22,325. So short term, this 22,325 should provide a support, and the trend should continue. It went there, down there, and then it bounced back very quickly from there. Now, on Reliance was trading strong, tested the 3,000 odd level, the daily chart, made a fresh high, but then it corrected, I think, on uh, Thursday. It went down, but till the time it is above the 20 EMA, it is strong. That is 2942. It is strong, and it should keep doing well. The other good stock is Larsen. So if you see here, um, there has a gap here. The gap has got filled. It has made a very short-term cup and handle, but with just 2 days of evidence, you can't really call it a handle as such. And this was also very small cup. But overall, whatever we may see, the trend is up. So this is likely to go up till the time it remains above 3650 odd levels. This is a strong stock right now. Now, Nifty Bank, if you see here, uh, it's in a rising uptrend, and uh, this is the one sector. This is a weekly chart. It was strong last week. It is batting for the bulls with a combination of value buying and short covering. So both private and PSU banks contributed, and with little bit more effort, I think Nifty Bank should go to make a fresh all-time high, which it made in last year in December. So it is looking up, and the trend is positive right now. This is a daily chart. If you can see from here, it's trending upwards. It took support at 200 EMA, and after that, it has crossed the 20 and 50 EMA. Hence, it is looking good, basically because of strength in HDFC Bank, which after making a bottom around this 1360 odd levels is now above the 20 EMA on daily chart. So if it sustains above 20 EMA, it will do well. So for short term, 1435 and 1400 should be stop losses for HDFC Bank. And if you can see, the RSI is also going upward. So there is some kind of momentum now coming in. Now, ICICI Bank has broken out above its trend line. Hence, it is looking strong. It went crossed that 1100 odd level, but it retraced back. So we'll have to watch this now. Till the time it is above this trend line, it should remain strong. Uh, PSU banks, if you see here, they had a strong week and they have come back. You know, they were negative over for 2 weeks or so. They made a bottom and then had bounced back very nicely. They were up 6% for the week, and they were also now contributing to the rise of index. This is basically led by SBI. If you see the weekly chart, it consolidated, but now it is planning to go and test that 800 odd level, and then it should move up from there. Right now, though on weekly chart, it is overbought.
Tarun, is there some negative news about SBI is likely to stay up or go down?
नहीं कोई नेगेटिव न्यूज़ नहीं है सर. Nothing. There is nothing negative. It's a minor issue. I don't think there is anything negative, sir. So Canara Bank, again, it has changed course to weeks, and then again now it is trending. I think it tested that 600 odd level, and once it crosses that, clearly it will go up higher. Though RSI is slightly overbought, but it's in good momentum right now. So don't be bothered about these kind of things. PSCs have public sector enterprises have come back again in a big way. Uh, they are again moving up. So there would be sector rotation, but they will outperform because, as I said, that the businesses are now becoming moated now. Hence, there's a lot of money which is slowly and grudgingly moving into them. And again, if you can see from here, the trend is clearly positive, and there is no dip as such. You know, you have one odd week of correction, but it bounces back very quickly. HL, after this news of some order wins, it has moved up, made a fresh high, and it's trending upward. So these are the stocks where you should always remain positive on these stocks. Again, Coal India, it had a negative news, made a bottom around 425, 430, and is now slowly and slowly moving up. And as the power demand and their volumes and growth improves, they will keep performing well. It had a breakout kind of thing in September last year from around 250 odd levels, and now it is not stopping after that. So it's all related to the narrative the market is giving. RVNL, this is what I was telling about, made a high and it has now gone down. In my opinion, it should go and test the 20 EMA on weekly charts, and I think they will start bouncing back after that because railways are a core growth sector for Indian economy for the next 5-6 years. So they cannot be put down. There is some overvaluation and all, and people are weak hands are moving out and all that. Now, Nifty IT, as I have covered, again, it is correcting. I think it should go down to around the 20 EMA and bounce back. But it they will wait for the next quarter's results also and then test the all-time high it had made. But it has made a good rounding bottom, and let's see from here what happens. Infosys has corrected to the 20 EMA on weekly charts. So this is a crucial level. From here, it bounced back also on last week. So we'll have to see that. all depends on the results and their guidance and all that. Now TCS, it went below this 4,000 odd level, but bounced back very quickly from there. So there is some buying which is emerging in all these IT stocks. So no need to panic here. Now I'm adding few indices which I was not covering earlier. One is Nifty Energy Index. You see, this index from last year onwards, it is constantly trading upwards, and it is making new highs. So along with PSCs, is this index which is doing well. It is overbought, but so be it. All the constituents of this includes Reliance also. They are doing well. The other is Nifty Infra Index. Again, this one is a weekly chart. So if you see again from last year March onwards, it's on way up and constantly trending upwards, and all the manufacturing and industrial related stocks are doing well. So these are the sectors of the economy which one should be focused on. Mid caps are consolidating now. So if you see here, they are consolidating for a month or so. Now they are consolidating. I think there is some froth here which is coming out, and but most of them have good liquidity and good businesses, so they should bounce back. So one has to be very careful in this sector. Which stocks are you going in and all that? Small caps, if you see, again, they're trending downwards. They've had 5 or now weeks of lower levels and red weeks, red candles in the week. So I think it should go down to the 20 EMA on the weekly chart, and then we'll see from there what happens. Now the stock which was on fire last week was Tata Chemicals. So over last five sessions, it has moved from 9 to 30 odd levels to around 1350. That is roughly, uh, it has given 400 rupees return over 5 days. And based on the news, which we'll have to see, and the volumes are also very high, much above the average volumes. It is not moving up because of fundamental, because soda ash business is not really doing well as such. And it was at nearly, before this move started, it was at oversold, nearly at oversold levels, and then it bounced back because there is a news about their stake in Tata Sons and Tata IPO listing, etc. But this has been denied, so I think this there is too much of froth here. Now, same thing is happening with Tata Power also on Thursday, because once people saw through Tata Chemicals, now they wanted something else, so they started playing Tata Power. They also have 2% stake in Tata Sons and all that, but I think these moves will reverse. The other good news about Tata Power was also that they have been permitted by Merck to raise power tariffs in Mumbai, at least by 20%, and hence that was one more reason why Tata Power was uh, up. Tata Motors has continued with its uptrend. This has been powered because of the division which they plan to do in their businesses in the personal vehicles and commercial vehicle businesses. Hence, so those people who would be invested in personal vehicle PV business of Tata Motors would have a good stake, or would be able to play the JLR story, which is their major business, which contributes to their profits and all. Now, the last stock today in terms of technicals I will cover is HBL Power. It has corrected a lot and is now below the 50 EMA also. It went down that. There is, I think, some concentrated selling which is coming. Hence, I will look first at this level of 100 EMA to start accumulating, and then the 200 EMA comes around somewhere around 330, 340 odd levels. That should be further level to buy. The business are good, the sector is good, so the profits are likely to increase. So not to worry. Only thing is that this is a short term, because of the SEBI action and all that. There is the mutual funds, small cap funds, etc., PMSs, वगैरह, they are doing some profit booking. So this is our opportunity to buy high quality businesses at cheap valuations. Now, one stock I'll cover. This is an interesting stock because I was trying to understand why the stock is going down actually. So I'll try to cover as to why the stock is going down. PG Electroplast, it is part of the uh, PG group, specializes in ODM, OEM, and plastic injection molding, catering to 50 plus leading Indian and global brands. They did a rupees 500 crore QIP, which has been utilized partly to repay debt. Now, the QIP was interestingly done at 1641 level, and it is below that levels now. At December 2023 end, gross debt stood at 263 crore with cash balance of rupees 164 crore, resulted in lower financing costs, so it has improved the margins. It is currently serving 25 plus customers in RAC and washing machine category. Capex of rupees 180 crore in FY24 will be in the new AC plant at Bhiwadi, new building at Supa. Supa is in Ahmednagar, and Goodworth joint venture ready for mass production of LED TV for next month. They have agreed to acquire 100% stake in next generation manufacturers NGM and Amstrad's company to manufacture consumer durable products such as RAC, LED TV, etc. Amstrad is also an Indian company only. A strong order book by RAC OEMs for upcoming season. PGL expects fourth quarter revenue to grow 30% year on year at 1075 crore and EBITDA at 100 crore, up 30% year on year. So we'll have to watch out for the fourth quarter. Third quarter was slightly weak, and because of that, the stock corrected. One of the reasons why these OEMs of RAC are correcting is because, sorry, the uh, the makers of ACs for OEMs are correcting because OEMs like Voltas, Blue Star, etc., they are planning to focus on in-house manufacturing, which may impact their volumes of all these EMS guys. Uh, and one of them would be PG. They are also waiting for IT hardware PLI approval, which is expected soon. Now let's see their revenues. If you see here, year on year, they had a revenue growth around 16%, and Q on Q also was 16% for third quarter. First quarter was very strong, and fourth quarter is also expected to be strong. So if you see here, this is in millions. So this is roughly around 530 crores, and EBITDA of 442 crores. So what they are saying is that uh, fourth quarter revenue to be 1075 crore and EBITDA at 100 crore. So if you see here, that means they are talking about 1075 crore. So that means nearly double the revenue uh, of third quarter, and from fourth quarter around 20% higher. This is what they are talking about, and much higher profit. Uh, if you see segment wise, uh, the product business is roughly 58%, uh, sorry, 52%. It had, which is major part of their business, but it only had 3% year on year growth, while consumer electronics had 73% growth. So the in their major business, there is no growth, which is the product business. But in others, like consumer electronics, they are having growth because of their QIP. Their finance cost, if you see here, finance cost has also decreased. So it was 97 crore. It has decreased 20% year on year and Q on Q. Uh, Basically, they have been able to utilize the money which they have collected for QIP 500 odd crores. Now, what are their business vertical? Product segment is room AC, washing machine, and air coolers. So this was the one where the growth was less. The plastic molding is the third. Electronics, that is television, PCB assemblies, etc. This was the one which was showing good growth, and tool manufacturing. And if you see here, business composition across verticals for FY23, main contribution is from products, then plastics, and then electronics is a smaller part. Hence, if this part of the business is not moving, there is lack of growth. Now, what is expected is they should do a growth of around 25 to 27% over next 2 3 years, and EBITDA margin would be kept in 8 plus category. So, which should drive EPS growth of around 20-25%. The reason the EPS growth will be lower because they're doing a lot of capex and a lot of acquisition. So that's why if you see here, the finance cost is higher because of the money they have to pay for this. So this is one issue. So if you see here, expected EPS for FY25 is around 71 or 70 odd rupees. So if EPS for FY25 is 70 odd rupees, at they are presently reaching around 25 times. So you can easily value them at 1750 to 2100. Now let's see, come to their balance sheet. In the balance sheet, if you see, because of the QIP, the share capital has gone up. So this has now become 26 crore. Total debt is still high, 582 crore, because now they're doing a lot of capex. Capital employed is also increasing because of all the acquisitions and the growth and capex they are doing. Hence, since they are in this path, the cash flows become very important. Now let's see the cash flows. So if you see here, they were free cash flow negative for FY22 at 23 and 24. This is despite raising 500 crore equity. So net cash flow would be 391 crore positive. But because of their capex requirement and other issues uh, uh, related to debt and all those issues, their net they would be net cash flow negative for FY25 and FY26 also. Now, what happens here is if there is not lower margins, like the margins of 8% are not there, say for example, they get 7 or 5 6% margin, the EBIT will fall. And moment the EBIT falls and the requirement of working capital and capex, etc., remains the same, the cash flow will reduce further. So there the risk of the business starts coming in when they are not able to service their debt and other issues. And as they are in acquisition mode, they are raising debt and doing all those issues. Plus, if they raise more equity to get cash, then there is a equity dilution. So they are presently adequately priced, but because of the business risk which are associated with debt and future growth of the business and all that, because of high competition and also due to the OEMs doing their own, creating their own RAC business, the stock has corrected. Now, if you see here, it went to around 2500 odd and then has corrected down now. It has come below the 200 EMA and the charts are very negative, very weak right now. It is oversold right now. So instead of just getting into it, one has to see where it bottoms out and then try to slowly buy into this stock and hope for uh, growth, which will should come with the fourth quarter result, because this projection of fourth quarter result, which what management is talking about, is also known to everybody. Despite that, the stock is correcting. So we'll have to watch for that, and I think the stock should bottom out by the fourth quarter results. Uh, So negative. Now the point here is the negative cash flow in any year is part of the business activities where firms have to spend more to evolve and find growth opportunities. Hence, you have to watch out for their cash flows very carefully. Now the other stock, which is very important to see, and people were asking for it, is Vedanta. Now, Vedanta, being a largest natural resource company in India with a diversified portfolio of low cost, long life assets, will benefit from buoyant growth story. That is India story. They are undertaking a USD 6 billion of capex across all verticals, aiming to double their capacities. They will continue to focus on deleveraging, and has deleveraging implies basically reducing their debt, and has set a deleveraging target of USD 3 billion at Vedanta Resource Limited. VRL is Vedanta Resource Limited, which is the holding company. Over the next 3 years, I'll show you the structure of Vedanta later. Uh, they want to demerge into 6 independent pure play companies that I'll also cover. The existing company will be split into Vedanta Aluminium, Vedanta Oil and Gas, Vedanta Power, Vedanta Steel and Ferrous Metals, Vedanta Base Metals, and Vedanta Limited. Uh, they did a liability management exercise recently. So what they did was that the average maturity at holding company has extended from 1 year. The average maturity of their debt has been extended from 1 year to 2.5 years. That means they have renegotiated or restructured their debt while holding company debt management remains adequately comfortable. This has resulted in spreading the existing exposure of debt, which was most of it was coming up in next 1 or 2 years, has been now extended to 20 FY 29. So it has balanced their risk structure. But moment any company restructures their debt means that they want to give it at a later date, the cost of borrowing also goes up. So it is not that it is at the same rate. It will be at a higher rate for longer time now. So until the debt repayment overhang at holding company is resolved, debt overhang at Vedanta and Hindustan Zinc will continue to stay. Now this is the structure of Vedanta. This is the Vedanta Resource Limited is unlisted, and this is the uh, holding company, which has 50.1% stake in Vedanta and in some copper mines, Concola copper mines, etc. Now, Vedanta has subsidiaries. Hindustan Zinc, they own 64.9, which is listed. The balance, that is Bharat Aluminium, Zinc International, Talwandi Sabo Plant, Electro Steel Steel Limited, etc., are not listed. Now, Vedanta controls Sisa Iron Ore, Sterlite Copper, 600 megawatt power plant at Jharsuguda, Aluminium, Odisha Aluminium and Power Set, and Kane Oil and Gas. Now, what they are planning to demerge is into 6 parts. Aluminium business will include the Lanjigad refinery, Jharsuguda smelter, and Balco, 51% stake. Power business will have 190 megawatt Talwandi Sabo power plant, 600 megawatt Jharsuguda IPP power plant, 100 megawatt Meenakshi Energy Limited, and 1200 megawatt Athena. Oil and gas business will have Keynes Oil and Gas. Steel and ferrous business will have Sesa Iron Ore, Sesa Coke, Liberia Iron Ore, and ESL Steel. Base metal business will have Zinc International. This is different from Hindustan Zinc. Tuticorin Smelter, KCM, and Fujairah Gold. And Vedanta Limited, the main entity, will house Hindustan Zinc Limited under it, along with potential manufacturing, display, semis, and stainless steel. Now, if you see here, business-wise revenue breakup percentage over the last years. So if you see here, for FY 24, copper is 14%, aluminum is 35%, iron ore is 6%, power is 5%, zinc is India, that is Hindustan Zinc is 21%, zinc international 3%, oil and gas 9, steel and other 6%. So basically, revenue breakup or the maximum revenue is coming from aluminum, zinc, that is Hindustan Zinc, and copper and oil and gas. So this is the major source of revenue, and it is likely to remain the same over the next few years also. So there is not much change which is happening here. Now EBITDA breakup, if you see, that is changes. The the operating profit is basically coming from Hindustan Zinc, FY 24 48%, which is going to grow to 56%, and the profit from aluminium and others is going to go down. So even if you see here, the basic major profit to them, to the company, is coming from aluminium, zinc, that is Hindustan Zinc, and oil and gas. So basically, the major earnings are only from Aluminium business, Hindustan Zinc and Canes, which contribute to the major profit. Balance are of no use. So once they demerge the business, you can understand which part of the business will attract investors. Now, this is expected out of them. Now, this year, they are expected to have EPS degrowth, and these are all estimates only. There is no guarantee that this will be achieved. But the only guaranteed is that their debt to equity will keep at a higher level. All this ROE, ROC, which they are talking about, may not take place. Because this all depends on how the business and the capex takes place. Presently, their PE is pretty high, and if you see here, the sales are generally remaining at the same level. They are talking about higher margins, which will result in now it becoming profitable from where now they were lower EPS growth, etc. So this has to be watched very carefully. Now, if you see here, the consolidated debt is around, this is in billions, so that means 62,500 crores. 625 billions is the consolidated debt of this company. Now we will see entity wise debt and cost cash moment. So if you see here, gross debt entity wise, Vedanta, Kane, Zinc International. So the major debt is with Vedanta Limited, Zinc India. Though they are a profitable company, but these guys have settled them with the debt also. And balance debts are not much. So the net debt, if you see here, is around 625 crore. Now let's see their cash flow statement. Let's see for FY24. So the issue is that though they are having an EBITDA of 288 billion, but they are net cash flow negative for financing activity and capital work in progress. The free cash flow get reduced further. Then from investment activity, their net cash flow negative. Financial activity, their net cash flow negative. So the closing cash balance, they would be negative over the next 2 to 3 years because of decline in cash and payment requirement to keep paying dividends, because what all the money which they're getting from Hindustan Zinc, they are just giving it back to as a dividend so that they can fund the debt of Resource Limited, which is the holding company. So this is a major problem, and interest costs. So if you see that for debt, they have to pay the interest. So these things are keeping their cash flow basically negative. And now that is definite that the cash flows will be negative, and these will become more negative moment if there is a decline in EBITDA. Now, EBITDA for a company making natural resources depends on international prices and is not in their hand. Hence, these can decline very quickly or go up. So, like in FY22, they were having very high EBITDA because the prices of metals were very high, and it has declined now. If you see to 288 billion from 448 billion because the metal cycle has changed. So this one has to be very careful with this. Now, business verticals, key drivers, Hindustan Zinc, EBITDA margins are good, and they are profitable in terms of zinc mining. And they are talking about expansion of over 2 metric ton and silver production of 1,500 ton, etc. But the point is, it takes capex, and the capex, how long will it deliver results and all that, how they'll become profitable. There's a cost of capex, so this has to be seen. Similarly, in aluminium, which is again their profitable business, domestic demand is expected to rise. Vertically integrated operation focus on value-added products. 3 metric ton capacity with EBITDA potential of $1,000 per ton. Zinc International heading towards 1 metric ton zinc. This is one part of the business they want. They wanted Hindustan Zinc to buy out, so that's to get them money from their stake of the Resource Limited stake, which the government refused because that would have taken care of all the profits of Hindustan Zinc Limited. Uh, Oil and gas, strong domestic demand, robust exploration portfolio with over 5 billion barrels of prospective portfolio, plan to achieve net zero by 2030, that in terms of carbon emission. Power, this is the Talwandi Sabo power plant. major contributor to profitability once new capacity is up in stream. Jharsuguda plant backed by LTPPA with Gridco Odisha till 2037. So that should be revenue positive. Iron ore, they are getting into Liberia for ramping up to 31 metric ton. Karnataka mines, they can expand to 15 metric ton. They for steel, they want to expand to 15 metric ton. Expected cost of setting up additional capacity USD 600 to 750 ton. Now, some broker has done their SOTP based valuations for Vedanta exclusively, then with Hindustan Zinc and combined. And they have come to the target price of around 270. So if you take this as on face value, at 270, presently it is, if you see here, fully priced. This is Vedanta at 282 with hundreds, so much of risks associated with this company in for future. So it's fully priced, though it made with all the negative news, it went down to 210. And after that, the restructuring of the business and split of the business, etc., was announced. So it has gone up right now. In last week was also good. It went up from the 20 EMA, etc. Once it crossed the 20 EMA, then it has gone up to 280 odd level. So this is a stock which is for high risk takers and need to be watched very carefully. The reason is multiple capex will exert pressure on companies' cash flow. So right now they are talking about that there will be cash flow positive after 3 years. It may not happen, or it may happen also. Nobody knows. Share of aluminum is going up, which is good because there is a value which I said. Hindustan Zinc's contribution is stable, which is their key businesses, and provide basic revenue and EBITDA. But EBITDA share of Hindustan Zinc is remain expected to remain 50% going forward. Uh, Net debt, which I showed you of around at the end of this quarter, was 62,500 crores. That comes to around 168 rupees per share. So you can judge it's 280 rupees is the market cap, or is the current price, and 168 rupees per share is the net debt. Uh, Vedant, what they have done is they have done a liability management by refinancing their bond maturities and extending the same by 3 years, thus resulting in lower maturities over FY 25-27. But the cost of borrowing or the problem will debt will remain for next 4-5 years. So solution for them is to sell some of their business and become debt free and all, which they are not ready to do it. Okay, the last stock today, again, very interesting, which is in news, is Zomato. The food delivery business is still in a nascent stage in India with a long runway for growth. Management retained its long term revenue growth guidance at 40% year on year, but increased it to 50% year on year for near term. So, long term, they're saying 40% should be reasonable. The reason is continued strength in Blinkit, which will compensate for slower growth in food delivery, 20% year-on-year gross order value growth, which is moderation from third quarter growth of 27% year-on-year. Zomato continues to see a break-even in Blinkit in first quarter FY25. That means uh, end June quarter 25, break even, it should become EBITDA positive. Despite maintaining a high pace of new store additions, they are added 40 stores Q and Q in third quarter for Blinkit. Quick commerce is more resilient and sustainable growth driver than the food delivery business. The demand for food delivery business is discretionary in nature, while quick commerce is a critical element of any household. Hence, this is becoming an important part of their business. Within food delivery, the improvement in contribution margin is primarily attributed to increase in average order value and ad revenue and platform fees, and there is not much of efficiency as such. So basically, the average order value has increased, so they are making more money. Ad revenues have increased because they are able to advertise all the restaurants on their site, on their platform, and they are charging platform fees to the people. So that is where they are making money. Now, let's see their quarter results. So if you see here, they were better than estimates for third quarter. They had a growth of 68%. They were expected to grow a 58, so they were better in terms of revenue net delivery. Gross profits also were up 30% as per expectation. They became EBITDA margin positive overall, 1.6%, which was better than expectations of 0.6%. Uh, PAT, reported PAT, well, this is in millions, so 138 crore PAT, which was a big deal, and they have become positive, and they are expecting to be to have a profits of 356 crore in this FY24, this financial year, so which is a big step. uh, FY24, if you see with as compared to FY23, is expected to show a revenue growth of around 70%, and margins also roughly from negative they are becoming positive, minus 13% they are becoming to 3% positive. That is improvement of 16% clearly. So this is what is driving the business now. uh, they have shown overall they have shown sustained 15% Q on Q growth in revenue and improvement in profitability from negative profit margins. They have become profitable now. So this is positive. Food delivery, the gross order value continued to see moderation from peak. So though the overall the absolute value of GOV has moved up to 84.9 billion, but the growth is moderating. But take rate has improved further by 70 basis point Q on Q. Now, take rate is basically how much money a business makes from a transaction for these platform companies. So they are making around food delivery take rate is around 20%. So this is what is, since it is improving, it is driving their profits now and improving their EBITDA. Now, this is Blinkit. So gross order value saw a strong 28% sequential growth. So if you see, remember that was 6% for food delivery and 20, 28% for Blinkit. Take rate, though it is the same. Take rate is around 18%, but still 20% for food delivery and 18% for Blinkit is still decent, leading to 28% sequential revenue growth. So the revenue has grown 28% for Blinkit, and their EBITDA improved. So EBITDA is becoming positive, and I think as they are saying, they will be overall positive, profitable for Blinkit by uh, first quarter FY25. Now, MTU is monthly transactional users. So this is in millions. So that means now by FY24 they have 18 million, that is 1.8 crore users, and they are expected to have around 2.3 crore odd users hopefully by FY26. I'll tell you how they are doing it also. And but order frequency is improving. So from around 3.5 per month for each user, it is likely to go up to 3.9 or 4 in another 1 or 2 years. This is what will drive the revenue. First, you have to acquire a customer and then make that customer give more and more orders. So let's see, monthly transaction users are improving. So reaching around 2.3 crore in FY26. Order frequency is going up. Order per month are also going up. Orders per year will go up. Average order value in rupees. So from 280 odd rupees is going up to 440 odd rupees, but that is also due to inflation also. So take rate is also improving to around 20%. So they will make clear 20% margin. Delivery revenue so would be around uh, 96 96 323 million. That is roughly 9,632 crore, and roughly 6,300 crore from Blinkit and Hyperpure 6,600 crore and others. So revenue is expected to be 23,000 odd crore in FY26. So if you see here, net sales, FY26, etc. The margins are improving. FY25, 4.5 to around 10% in FY26. PAT, 9.5 to adjusted PAT to 22.9. This is in billion. So that means for FY26, they're expected to have 2,200 odd crore of profits. ROE is improving, ROC is improving, PAT margins are improving. EPS is expected to be around 2.66 uh, in FY26. Now, this is interesting, right? Because if assuming they do around 2.5 also, 2.5 rupees also, and with their growth. So if you see, like I gave an example of consumer monopoly businesses, Varun Beverages, Titan, Trent, they're all trading at 100p. Now, what stops them from trading at 100p? So it's just a point. So with the kind of, and all these businesses have more than 20% growth, profit growth. So here these guys are growing more than 100%. So nothing stops them also from being valued at 80 to 100 times also. So that means they would be trading at 200 plus. That is Zomato. And if you see here, 38% revenue CAGR over is 40% revenue CAGR is roughly expected. Right now they are claiming it can go down, it can go up also. Now the stock over the last 3 4 days has corrected because one of their promoters or P's, China's Ant Group sold stake, and Morgan Stanley ex Asia has invested around 909.5 crore after the stake sale. Uh, so if the gross order value is improving and better ad monetization takes place on platform, things will improve. What is happening is now they are moving into a stable profitability regime, so the revenues and profits will become more predictable. Hence they would be given higher p or higher valuation, because moment the predictability comes, then you can value the business more comfortably. Food delivery margins have improved. Quick commerce is giving better contribution and better margins despite accelerated increase in dark stores. Now dark store is the one which is particular to this quick commerce business. Is the dark store is the one where no customer visits, so this is where they keep their stuff and from there they supply. So they are increasing that. What they said is that moment the store reaches 50% utilization, they move on to make a fresh store. uh, what I was talking about is they are rolling out Zomato every day. So where they would be supplying kind of a la carte menus where things will be listed and you can order. This is for all meals. So they would be supplying this, and which will help their monthly transacting customers and improve the order frequency also, because as customer acquisition is the key issue. So I have finished. We'll take questions now.